Hi, my name is Lisa Hannum. I'm the executive editor at moneysense.ca, and today I am joined with Jeremy Koven, the chief operating officer and co-founder of CoinSmart, a Canadian cryptocurrency trading platform. So today, thank you so much for joining me. We're going to be talking about Ethereum and the merge. It's got a big capital T in front of the merge. So why is this so important? And that's what we're going to be discussing, what this means to investors and really like getting more insight into what the change into the blockchain for Ethereum means to us. So first question for you, Jeremy. Ethereum is the world's second biggest cryptocurrency right after Bitcoin. Ethereum's platform got a major upgrade known as the merge. So can you tell us what's changed?
Definitely. Well, first off, thanks for having me, and I'm happy to discuss the merge. Really, this is something that has been in the works for a number of years. It's highly anticipated, and it really is a major update for Ethereum where they're able to change the way that they actually process and validate transactions. So the consensus algorithm moved from what we call proof of work to proof of stake. And this is a game changer in many ways. So let's really talk about the differences there. So with crypto as a whole, there's no central authority, there's no middleman, no bank to verify transactions. Instead, we have this decentralized global network of computers that handle this work. With proof of work, it's actually a mining process that was first introduced by Bitcoin. And this process uses extreme amounts of computing power to verify and process all of the transactions. And it requires these computers to work extremely hard to solve these complex mathematical puzzles. In return, if you solve those puzzles, you're actually rewarded with the underlying cryptocurrency, in this case, Ethereum, and then you're able to actually enter the next set of transactions or the next block onto the blockchain. So this is a very secure method, but the challenge with proof of work is it's a very wasteful process, and it leaves a major carbon footprint since it requires these powerful computers to really be working 24/7. And just to really quantify that and give a good real world example, so Bitcoin specifically, his electricity usage actually exceeds the entire annual usage of a country the size of Norway. And transitioning for Ethereum from proof of work to proof of stake actually decreases this usage by 99.9%. And I heard Vitalik speak, and he said that for Ethereum, they'll actually decrease the total worldwide electricity consumption by 0.2%. So that might not sound like a lot, but trust me, it really is. And now the Ethereum network will actually use a similar amount of electricity that only 100 American households would use in an entire year. So it's very, very significant. With proof of stake, instead of solving those complex mathematical puzzles that you do for proof of work, you actually have these validators that stake or pledge their Ethereum to have the right to verify these transactions. And the computers that are used for this are much less powerful, and they don't use anywhere near the same amount of electricity. So that's the reason why they did that. And really, overall, for a platform like Ethereum, throughput's extremely important. And right now, Ethereum can only actually process approximately 15 transactions per second. Whereas if you look at a payment system like Visa, they can process up to 24,000. So really with this merge, it did a number of things, one of which is it laid the groundwork for future scalability upgrades that can really allow Ethereum to be able to handle many more transactions, which will be big for the ecosystem moving forward.
The real world example really pushes that home of like how much energy it uses, right? Are there any drawbacks
Definitely.
to the merge?
I mean, at this point, there aren't many. Obviously, it's unproven at a large scale. It is brand new, whereas Ethereum has been around since 2015. But so far, everything we've seen looks quite positive. And then the only other part is if you do want to take part in the Ethereum ecosystem, running a validator, running one of those computers that powers the ecosystem, it does require you to pledge or stake 32 Ethereum, which currently is just over 40,000 US dollars. Whereas with proof of work, you could have got started for a fraction of that amount.
How has the value of Ethereum's cryptocurrency been affected in the weeks after the merge?
Yeah, so leading up to the merge, we saw Ethereum rise as everyone was very excited about it. Immediately after the merge, it did drop a little bit and it's traded a little bit flat. However, we have seen in the past 7 days that it's up approximately 17%. I think overall, the issue is more of a macro one. Overall markets these days, we're seeing obviously higher interest rates, a risk-off environment, and that's hurting all asset classes at this time.
For crypto investors, what opportunities and what risks does the merge present?
I don't see many risks overall. There has been some concerns about censorship because the way it works with proof of stake is, those who have kind of the amount of stake, the most Ethereum, have the most control over the platform, which goes a little bit against the ethos of decentralization. But over that, I mean, I don't see too many risks. What I see most opportunities. You hear the phrase investing thrown around a lot these days, and ESG, and that naturally was a major concern with mining through proof of work. All of a sudden, we solved that issue by decreasing the usage of electricity so much. And in addition to that, you also have the ability to earn a yield. If you stake your coins, in addition to the long-term appreciation, you're going to get between 4 to 5% in annual rewards. So we expect to see a lot of new institutional investors and retail investors, get into the space.
Okay, and I guess like the same risks hold true anyways, right?
Yes, they do overall. But again, we're pretty bullish on it. This isn't investment advice, but we definitely are very confident in Ethereum. We think it's a great platform, and we're excited as it moves forward and continues to mature.
You mentioned staking. Can you expand a bit more on that and what that is and what it means?
Yeah, so really what staking does is two things. Number one, it allows you to take part in the governance process. So when Ethereum wants to make a change to its software or a change to how it works, they actually do need to get consensus, meaning 51% of the people, of the validators, have to agree with it. So if you stake your Ethereum, you can become part of that process. But at the same time, you also can get a reward every year. So I mentioned between 4 to 5% per year would be paid out to you in Ethereum, which is a nice bonus on top of, again, the hopefully long-term appreciation that Ethereum will show.
My last question is, what about those investors who aren't necessarily really involved in their crypto investments? What should they take away from the merge?
So a few big takeaways. I mean, number one, what we touched on there is that having addressed a lot of the environmental concerns, we do think there'll be a lot more investors getting into it, especially on the institutional level. As we know, the amount of capital they have is quite enormous. The staking piece is a big one because, again, you get to get that annual return in addition to the long-term appreciation. And also Ethereum now becomes deflationary. In a time where we're seeing a lot of high inflation and money printing, Ethereum actually has the groundwork now where it can decrease the supply over time, which we would expect to be a bullish signal for the overall price. And that's really exciting overall there. And I think the last piece is just about scalability. If you think about Ethereum at its core, it really is this kind of decentralized kind of supercomputer that people use to build platforms on top of. I think that with the steps they're taking to improve the scalability, to lower the transaction fees over time, we're going to see more real world use cases and more people using these platforms, all of which are really paramount for the long-term success of a project. It's not just about hype. It's not about the excitement. It's really about the use case and the overall utility. And this merge really laid the groundwork for that.
Well, thank you so much for your time. And I really appreciate the insights. And check out Jeremy's Ask Money Sense column, Ask a Crypto Expert. It's featured on moneysense.ca. I'll post some links below so that readers can see more. Thank you so much.